So how exactly do you invest into an index fund step by step, okay? In this video, I'm gonna show you a tutorial. I'm gonna tell you everything. This way, you can do literally everything you need to do to walk away from this video with your account open and with your investment already made if you actually want to, okay? So you can have this video opened while you're actually downloading apps or, for example, using like a laptop to actually do everything at the same time. Now, imagine this, okay? I started investing at the age of 19, but it only took me about 5 years later to actually invest into mutual funds. And by the way, an index fund is just a type of mutual fund. So yes, you are watching the right video. But it was because it took me so long because I thought that mutual funds was for losers that couldn't pick stocks. And the truth is that I was the loser because I didn't understand exactly how good mutual funds actually were. And today, 100% of all my money is just into literally one index fund, which I will tell you by the end of this video. But let's get right into it, and do me a favor and smash the like button. That way this video can be shown to a lot more people that are beginners and interested in learning exactly how to start investing into mutual funds slash index funds today. Now let's get right into it. The very first thing you're going to need is going to be called a broker. A broker is going to be the company that's going to be buying investments on your behalf and also holding investments on your behalf. Now, when you're actually looking to have a broker, you don't want to look for what you see the most out there because usually it's going to be apps. I used to be a big fan of Acorns, a big fan of M1 Finance, a big fan of Robinhood, and these days I don't use any of those companies anymore because when you are investing for the long term, I'm talking about 50 years, 30 years, 20 years. You really want to invest with a broker that's been around for a very long time, has a very good reputation. On top of that is massive, so they have a lot of money and they also have the low fees and also, number one, amazing customer service. The worst thing is wanting to talk to a real person, and the only thing these companies want to do is have you email them, and that can take a while to get back to you, especially if you have an emergency. I don't like that, okay? So these three are going to be the biggest three out there, my favorite ones out there, with reliable, good customer service. And these three brokers are going to be Fidelity, Charles Schwab, and also lastly, Vanguard. And you might be wondering, Tommy, which one do you actually use? The one I actually use is called Vanguard. Vanguard has literally in control, I have it here written down if I'm not mistaken, yeah, about $9.3 trillion in assets under their control. Basically, a lot of money. So my money is just like a drop in the bucket. And then on top of that, they have over 50 million customers. That basically means that for Vanguard to make a lot of money, they don't need to charge you a lot of money, okay? Their fees are so low that if they charge you 0.03%, do you know what 0.03% of 9.3 trillion is? The answer is I don't know, but someone do that math and then comment down below so that way we all know, okay? But it's a lot of money. They don't need to charge you a ton of fees. I've been investing with like companies out there that I just don't trust, because they invest into like a bunch of different things and they're like a new company and they have a lot of like innovative stuff. No, I just want a company that's been around for a long time. Like Vanguard's been around for like over 100 years, I think it is, has a lot of money invested, has very low fees, and has a good reputation, and also has great customer service. So once you actually find the broker you actually want to use, the second step is going to be very simple. You actually want to open up an account. Now you might be wondering, Tommy, what type of account should I actually open up? Well, there are several, and there are different benefits to opening up these different accounts. But for the most part, I'm going to talk about two in this video. You can open up, for example, a retirement account or a taxable brokerage account. Either one is okay, but these have two vastly different benefits, okay? When you're talking about a retirement account, there is a massive benefit because the government basically waives taxes. Like if you open up a Roth IRA where you can basically invest the money once you've been paid, basically put that money in there and it grows basically tax-free. Or if you invest, for example, with an IRA, which is like a normal one, where you can invest your pre-tax money, have that money invested in there, and you basically grow it tax-free, and then at the end you pay taxes. By the way, highly recommend a Roth IRA. I have a video coming out on that pretty soon, so stick around for that. But if you just have money that you're not going to be investing into like retirement or whatever, and you just want to have it in a brokerage account, you can have that. And what do I have? I have both, okay? I have a Roth IRA, I have an IRA, and then on top of that, I have a brokerage account. If I'm you and I don't have a Roth IRA, I would open up that type of account, okay? You can open it up right on the website. Now, for all the people out there that are like, Tommy, I want to see, okay? Show me exactly how to do this stuff, okay? So right here is the Vanguard website, and you can click right here where it says open up an account, right here. That's all you have to do. And it tells you right here, I am new to Vanguard, and just basically sign up. And it's going to tell you exactly what type of account do you actually want to have, okay? Is it an inherit account? Is it to take a full control? Is it to open up a new account with money from the bank, rolled over? There are several options. Obviously, for most people out there, is probably going to be option number 1, which is basically open up a new account. And look at this, they even have like little things here with videos and so on. I did not know that. So you can just basically open up a new account, click continue, and then right here is going to tell you, how do you want to do it? Do you want them to invest on your behalf, or do you want to invest on your behalf? So I want to do things on my own. That's how I always do things, okay? When I invest, and by the way, I only have one investment, it's simple, so I don't need to actually complicate it. And then you can click right here where it says select accounts, and then basically, is it for retirement? Is it for general investing or emergency savings? Because you can have like a savings account, or is it, for example, like a 529 account, which is basically for education, to save up for college or whatever. For most people, again, if you don't have a Roth IRA, I'm going to recommend you actually open up a Roth IRA for your retirement. But if you just want to invest, for example, into a normal account, you can also do that too. You can actually have both, by the way, as you can actually see, or you can actually have all three. That's something you could actually do if you actually want to. But once you open up the account, then the next step is obviously going to be you're going to want to select your investments. Now, there's something very different here. And I should have said this first, but hopefully you're watching the whole video. But I should have said this first, literally. But the idea is that if you want to invest into an index fund, index funds have minimum investments, okay? So you have to have a certain amount of money to actually invest into it. But there is a way to actually waive this minimum investment, and that is by basically investing into them via having a retirement account. So if you have a retirement account, you can basically waive this investment minimum, and it's not a small amount of money. I'm going to show you guys right here. So my investment is into the S&P 500, right? So right here, let me show you guys, pull it up right here. Yeah, so my investment is into the S&P 500. Let me see if I can zoom in. There you go. And here it is, okay? It's the first one here. But if you see right here, there's a investment minimum of about $3,000. That is a lot of money for the average person usually. So what do? If you open up a retirement account, you waive this, it's fine. You can start investing with like $100, $50, doesn't really matter. But there's a second way to actually waive this, and it's by basically investing, instead of an index fund, just invest into the ETF version of it. That is an exchange traded fund. And as you can see right here, if you're going to be investing into VOO, which is the S&P 500 ETF, well, the minimum investment is literally just $1. So that way, if you have a normal taxable account, you can invest into it with just $1. What's the main difference between an ETF and a mutual fund? I can't go into all the details here, but the biggest difference is that when it comes to index funds, you're gonna have like one price per day, and when it comes to an exchange traded fund, it fluctuates just like a regular stock, okay? So it can go down, it can go high, but you have the same underlying investments, so it still has the same value. There's no big difference. Now tell me, what investments do you have? The answer is, I just invest into the S&P 500. I have both the index fund, and I have also the exchange traded fund. I have the exchange traded fund in my normal brokerage account, and I have, for example, the index fund when it comes to my retirement account, because at the time I didn't have that much money. So I put, for example, money into the ETF because there was no minimum really. And when it came to the actual index fund, I had my company was basically investing into it for me, and it was a retirement account, so it waived that minimum for me, which is actually a massive deal. So overall, guys, I use Vanguard. Fidelity is a great company. Schwab is a great company. All three of these are actually great companies, and depending on how you want to invest, they probably just all make sense. But that's how you actually get it done. So in this video, I showed you exactly the broker that I recommend, how to open up an account, and also the different types of accounts, okay? And how to pick and invest into an investment, okay? And by the way, these are all companies that would be happy to actually get on a call with you and guide you through the whole thing. But again, it's pretty simple to actually do. Now, I should also add this in case you actually want to copy me. The reason I only have one investment, and mostly it is into this ETF called the S&P 500, is because you might say, Tommy, isn't having one investment like not diversified? Isn't that risky? The answer is no, it's not. And here's why. Because this one investment is basically into several different sectors, okay? It's in the communication services, it's in the consumer staples, into energy, healthcare, materials, real estate. It has a lot of different categories or sectors that this one investment is made up of, okay? And it's the 500 biggest companies in the US, and it is pretty cheap to actually invest into it because, again, the expense ratio is only about 0.03%, and the cost is per share $510. But again, you don't have to invest $510 today. You can literally start investing with $10 or even like $1. And if you do have to, like, if you do want to invest into like an index fund and have like a normal taxable account, you could also just basically pay the minimum of $3,000, and then after that, you can just keep investing 100, 200, 500, whatever you actually want to. It's not like you always have to make a $3,000 investment. But guys, that is basically it for this video. Thanks for watching. I hope it actually helped you. And as always, long-term team out. Peace.